Hello and welcome to Working Dad Trader. I'm a full-time working dad that's doing the best I can to support my family and pay the bills every month. It's a struggle like everyone else. Any extra money that we produce, then I'm putting that to work in the stock market to hopefully change our family's future and set up some type of funds for my children when they're adults. If you can relate to this and the struggles of a family and finances and savings, then this is definitely a channel for you. If you could remember to smash that like button, it really does help my channel grow and develop. I'm already so thankful for my current subscribers, and through my videos from now on, I'm going to any subscriber that has made themselves public on my list, I'm going to list them on my videos as a thank you. So if you want to be part of that and have your name listed, then please remember to subscribe and you'll get all my content and you won't miss a thing, and that'd be great. Okay, so in this video we're going to talk about the risk management of trading and in the stock market. There are many risks. I'm going to go through all the risks you need to be aware of and hopefully give you some ideas and keep you all safe when trading. So risk management is so very important. I can't stress enough how important it is in trading and investing. Knowing definitely what you're risking. You should only ever risk what you can afford to lose, because stock market and the trading world is not 100% business. So many people lose so much money because they have no control over the risk management, what they're putting in the stock market, and it really does end badly for them. You really have to plan your trade. Planning is very important. Researching the stock you're interested in is massive. I've done other videos on looking at the financials of a company, doing research on the company, especially if you're a long-term investor. It's different slightly for what we're going to go into, but as a long-term investor the risks are a lot lower. So as long as you're buying into a really good company with solid financials, with years of history of growth, years in history of net growth, control of the debts, if possible the leader in its category, then over time that stock is always going to go up. So you're never really going to lose. This video is more to do with people that do day trading, swing trading and short-term trading. There's been a lot of that going on lately in the news with people like GameStop and stuff like that, people trying to get in, make lots of money by pushing it up and then getting back out again. This is where you really need to be aware of risk management, and planning is very key. You really need to know about the company you're going to invest in, as in, are there any up-to-date news that's coming up, whether it be announcements to do with their latest figures, if something's happened outside of something where it's affected that industry, because this can all change dramatically the stock that you think that you're going to buy into, and then all of a sudden it just goes opposite way because something drastically has happened. So you need to really be careful of what you're doing, and some of these points that I'm going to go through hopefully will help you sort of plan it better, and not lose money, because that's the end of the day. If you lose too much money, then you will end up going broke. So that's not what any of us want. So as part of the planning, we would look at some of the financial charts to look at entry into the stock and exit out of the stock. In this example, we would look at things like support lines and resistance lines in this example, as you can see. So we would, as the stock is coming down towards the support level, then we would try and get in and buy the stock, and then maybe set a target up near the resistance line to get back out again.
We may also use moving averages to give us some idea, some clue of the direction of the stock. In this example, the 50 and the 100 moving average are moving upwards, so we know the general trend for this stock is going upwards, so that might be our plan when we plan to buy to make it go up. So when we think about a trade, we need to think about what am I risking. In this example that I'm showing you, I'm going to risk £100. If I'm wrong on this trade and it hits my stop loss, I'm going to lose £100. Where if I'm right, my reward will be £300 when it hits my profit target. So if we look at the example, if we do 100 trades using this system and we win 50 of the trades, we'll win 15,000. Because obviously 50 times 300 is 15,000. If we lose the other 50, so we'll lose 5,000, we still come out with a £10,000 total. If we are really bad at getting our trades and getting it wrong a lot, and we only win 30 of our trades, that would be 9,000. And if we lose 70 of our trades, we'd obviously lose £7,000. But when you have 9,000 and take 7,000 away, we still come out with 2,000 because our risk ratio is greater. So we're only going to lose £100, but our gain every time we're right would be 300. So overall, when you count up the wins, they're always going to be higher than our losses, and that's how you have to take on a trade. On the short-term trade or a swing trade is to look at the risk, what you're risking. In this case, we're going to risk a maximum of £100, and our gain would be 300. So this would be an example of how you would set up a trade ratio 1 to 3 with a stop loss and take profit entry. So you would enter at around 392 and set your stop loss at around 382 with a take profit line of around 422. In this example, we've used 10 points down and then 30 points up.
Okay, so you've worked out your plan of how you're going to set up the trade. You've done your research. You've got a system that you think will do well. You know where you're going to get in and get out. You set your profit targets and you set your stop losses for safety. You know what the risks are. It's all ready to go. But the one thing which is really important, almost probably the biggest important thing, is no one really talks about, is this, your state of mind. You really need to have your state of mind in the correct situation, and you have to take emotion right out of trading, because that's what will get you to make silly mistakes and make bad judgments. State of mind could be angry, and you're going to try and trade when you're angry, which you will make rash decisions. You could be trading with jealousy because you've just watched a YouTube video where someone's making massive profits and you want some of that, so you go in and not really think about the trade properly because you're just trying to chase it. Or you might have lost your last 3 trades, so where you have been set in yourself, like we used the example of £100 loss as your system, and you've lost £300 today, and so you're thinking, I got to get that back. So then you suddenly forget your system and start risking £300 a trade, and suddenly you're worse off because instead of losing £100, you're suddenly losing £300 a trade. So you should never ever chase your losses. You should stick to your system and keep it under control and keep your emotions under control. You really have to leave that. If you use trading for excitement, then it's probably not for you, because trading and stuff is, you do really need to keep under control of your emotions. If you're only in trading because you're bored, it's another bad one. If you're just bored and you're just buying anything because you're bored, because you need something to do, that can also get you in trouble, and you can make really bad decisions and buy really bad stocks. So we really do need to cut all that out. So I'm hoping that from this video you've learned something, and you've taken away some ideas of how to protect yourself. Risk management is really important, because in the day it's your hard money that you're risking, and you have to be really comfortable with what you're risking, because the stock market isn't a guaranteed thing. You can lose money. In every stock market, there's a crash every so often, and you got to think of how would you feel if you lost 35% of your savings in one go, and on a trade if you lost a lot of money. So you have to be comfortable with the risks, and to reduce the risks, because no one can be perfect, and every trader cannot be right all the time. So by reducing the risk, reducing your exposure, then hopefully by the end you will come out profitable all the time. So thank you very much for watching, and I shall see you soon. Take care.